Hi, welcome to TQ Talks, where we talk taxes and tax-free living 365. Here are your hosts, Craig White, Sebastian Singh, and Patrick Augustin.
And we're back with another wonderful episode of TQ Talks. And it's what are we in? February, March?
I don't know, man. March. It's Women's History Month. You should know that.
Yes, it is. We're supposed to have, we got to get more guests on.
Welcome. Thank you guys for joining us. Once again, TQ Talks. You can find us on all your social media platforms as well as your podcasting platforms. And what we do here is...
we are a tax and advisory firm. So you haven't been with us before, let's go through that. We help our clients to reduce the amount they owe or increase their refund by giving them wonderful tax planning advice 365 all year long. That's what we do. And we also help them to build wealth for themselves now. That's right now, as well as the generations to come by using little-known life insurance secrets to help them get some investing and money coming in their pockets. And it actually works, people. Yep. So
talking about investing, should we buy a house right now?
Hot
2023,
topic.
March of 23 is when the question was asked. Is right now a good time to buy a house?
Yeah. That came up because we got, as you already saw, a bunch of people that we're doing the taxes and that question. Of course, we're looking over people's finance. Duh.
Of course.
And we're talking to them about credit. Duh. And then that becomes one of the things. Well, I'm debating. And of course, so let's backstory this. We do a lot of small businesses. So we're dealing with single entrepreneur people as far as sole proprietorships. We're dealing with partnerships. We're dealing with corporations, etc. That is part of the things that we have to ask. Like, what are your plans in the next 2 to 3 years, short-term goal, long-term goal? So it's not just we're fishing for this topic. It's what we have to ask, knowing how to prepare your taxes, right? Because certain things we might not be able to do or we should do, knowing that you're trying to get this house or car, whatever it is. So that has been the hottest question, man. Should I buy? Should I buy? Should I buy?
So word to Patrick, by the way.
Yeah.
Because that's his biggest thing that he like damn near yells is tax plan.
Yeah.
Of course, everyone wants an increased refund or a decreased bill.
Right.
But there's a flip side to that. And that's kind of what we ask the questions for, to figure out how you would need to move forward to attain the goals that you're setting for yourself.
Right. So now the question, of course, is Sebastian already alluded to, which we didn't intro. I'm Craig. I'm sorry. This is Bassi, if you haven't heard this before.
Welcome, guys.
Should I buy a house? And that there's an answer. I think Sebastian and I are probably on the same page. I know we're on the same page for the ultimate answer, but we're going to try to give you guys pros and cons to it and a little bit of history so you understand what's going on, because everybody's age is different. Everybody's understanding is different, right? So everyone knows we're swinging out of the crazy market that it was just extremely hot. 2022 prices were going bananas.
Very volatile.
Man, if you sold during that time, you won, right? If you found somewhere else to go where the pricing was lower, and you really, really won, because people were paying an arm and leg over what the pricing was. Prior to that, though, you're coming from a time where the interest rates were low,
correct?
Right? Historic lows, right? You're doing 2.5, 3%. You could do buy downs on points, etc. So you were coming out either refining or purchasing a home at some really low rate, so you can get a higher purchased product for a lower overall cost as far as, you paying it for financing because of the interest rate. So now we're in 2023, as he said, March of 2023. The pricing or the housing market is slowed, right? Things are changing. The feds are continuing to raise interest rates to try to drive down inflation, which continues to plague us. So they're talking about raising it 2 more times, even though these are the 2 more again before the year goes. And so the question is, well, do I buy a house? Because number one, if I buy a house now, what are the interest rates? I know we looked at it before.
It's right around 6 and 7, depending if you're refining or you're getting a new loan,
right? So,
or if you're doing a 15-year versus a 30-year. But we're right around 7 for your traditional 30-year loans.
Jesus. So 7 and and
7 plus, by the way. 7 and like 12 points.
The thing about it is, I think normally the rates, and I should have looked that up, but I'm pretty sure it's around 5% anyway. That's normally where they are, 6%. So when people are, freaking out, to use lack of a better word, when it was up to like 7.5, 7.7s or whatever, it was like, it is high, but it's not horrifying. And
right.
The only reason that sucks is because you're going to have to do the calculation to look at what that payment would have been if we're doing, let's say, round numbers, a 7% versus a 5% versus a 3%. That's a big dollar
huge
bills.
difference, especially when you're talking about the entirety of the loan.
Yes, because you're going to look at so the question then is, what do I look for? Because a recession, that's the first, number one, a recession is supposed to be coming if it is not already here. A lot of people say,
in it.
Yeah, we're in a recession, XYZ. But the reason that comes one of the topics you have to think about is because if you're thinking between now and the close of the year that the market is going to shift and the housing is going to become more plentiful, then that means the pricing that is going to be offered. I want to be cautious on what I say, Sebastian. I don't think the pricing of the housing is going to drop significantly. What I think is that people who have money are going to be able to offer way lower and get it. Does that make sense? I can give an example. So like if the house is worth $1 million now, and realistically, if you did the offer and everything went through, you'd probably pay them $950. I think if the recession or whatever they call it comes to effect, then someone's going to come in, Bassie's going to come in with money and cash and say, well, I'm not going to give you $1 million, but I'll give you like $500,000. They're going to
you think it'll be that much?
No, I think they're going to say absolutely not. But I think they're going to be bleeding so much. They're going to say, how about 7?
Right.
And you're going to say, fine, 675, and you'll close on it.
Get through on it.
And I'm stuck with my 950, which was a pretty decent deal until you come in and grab it cash at 675. And I think that's what's going to happen because a bunch of people have purchased product they can't hold on to, right? And that's what has happened over the last couple of years. And so them hanging on is going to have them. They don't have the money, so they're going to be bleeding. They got to offlet. You got to get it off.
And you know what we see a lot is not or I don't want to say we see a lot, but what we've seen over the years is not a reduce in the home value, just a slowdown in the appreciation of it. Yeah. So the values don't really drop back down. No, they rise, and they may rise quickly during certain periods of time, but then they kind of stick there. A correction really just holds them there.
Right.
Without them continuing that inflated value rise so quickly,
Yeah, I agree. And that's the whole point, right? The housing market is always a strong investment portion because of that reason. At the end of the day, fine, I'm not going to make $1 million today, but you don't know what the market's going to do. Housing is unpredictable. Right. So at the end of the day, you're still going to, again, like the stock market, S&P 500, over its lifetime, it's still going to be a beneficial investment, for you. So the other topics you have to think about is we talked about the recession. You have to look at your credit. That's 2. And then, I'm just throwing them out there. And what do you have available as far as money and finances? So credit, if your credit's not up to par, I don't know why the discussion is even here, right? Obviously, we have things that we can help you with. We do trade lines, we help with blah, blah, blah. But the thing is that if your credit is not there, then you're going to be even a worse situation because your interest rate is going to be even higher.
Right. It's going to hit you hard.
Yeah. It's going to hit you hard. If you're not putting that as a number one priority, then to me, you're missing out big time, right? Because it's not an overnight process, and you want to give yourself some time, 6 months, to at least get depending on where you are, I should say, to get yourself to a good 730, 740, 750 score to where banks are not, or whoever your lender is going to be like, all right, cool, they're trustworthy, we're happy, right? And let's keep this moving, right?
All right, so, but let's assume, because they're TQ Financial Services clients, that all their ducks in a row, right? They have their credit score is good. They know the type of house they want to buy or within the range. They know they can afford it. They have the past income
right, got you.
proof.
Right.
And as well as what they have in savings, and they have income to support the purchase, the loan. Everything looks lined up is now, only looking at interest rates and home values and stuff, is now a good time to buy a house. I'm always going to say yes.
And I'm gonna agree. I think if you love if you're buying it for the right reason, this is where I want to be. I like the area, blah 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 blah. You can go through a whole bunch of checklists. Then yeah, why not, right? Because at the end of the day, it's a long-term investment. I'm not buying it and crying if the market like 2008 does a craziness and then oh my gosh, I bought it for $5 and it went down to 380 or something like that, and I'm stuck with it. Because who cares? It's gonna rebound just like it did now, right? Yep. What are we, 2023, and you're back up to where the same house that you were dealing with that. You bought it for $5, it went down to 380 or whatever it was.
Now we're
300.
At 6.
And now you're at 7.
Right.
7. Right. So what do we, at the end of the day, fine. You didn't get the same amount of equity that someone else did, but ultimately you are happy with the purchase. You can purchase it. If the market corrects and the interest rate goes down, what do you need? 6 months to refi. So just live in a house 6 months, and then if it does something else, you refi
figure
again.
it out.
Yeah, who cares? So
figure it out.
I think you'll be fine. I would buy it. I guess I think we're on the same page. If I'm happy with the purchase, I'm happy with the purchase. That's the end of that for me.
But as always, make sure you are planning for your goals and being realistic with them. Here at TQ Financial Services, we could always help you with that. So hit us up on all our social media platforms as well as these podcasting platforms. Please like, share, and comment if any of this has been helpful.
Any questions? 800-413-1456. Last comment, save all your money, guys. Save, because if something happens, you'll be in the best position to take advantage of it, right?
Exactly.
Hope this was helpful. Have a great evening, guys.
Thank you.
Thank you for listening to TQ Talks. If you enjoyed the show, please rate and recommend on iTunes, SoundCloud, or wherever you get your podcasts. You can also get more information at tqfinancials.com.